Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, September 4th. We got actually just one item here on the economic calendar, and that is the Fed Beige Book. That will be released later today around 11 o'clock Pacific Standard Time. This is basically a micro economic view of what's going on by the different feds around the country, from your Chicago region to your San Francisco region to New York, the different regions around the country, and basically what it does gives you more of a micro view of where the economy is at on the U.S. level here. And again, that could stir a little bit. If it comes in some bad news, it could come in again. Could disrupt the markets a little bit. But today, the stock market is actually up. They're kind of disregarding what we had yesterday. The concerns. There was some good news that came out today. Hong Kong looks like China is going to pull back on some of their demands on Hong Kong, so that is easing the concerns by investors and hopefully deflate some of the tensions between the protesters and the Chinese government. Also, the People's Bank of China had announced that they're going to create some stimulus packages to try to stimulate the economy in China as well. And then there was some news on UK regards to the Brexit. The Parliament had blocked uh, basically Boris Johnson's possibility of leaving the EU without any deal. So basically, there was a setback in his on his agenda, and of course that could be, uh, you know, it could carry on for a while between the two. And again, it's uh, a setback for him, and of course, investors kind of like it because obviously what they'd like to see is some type of agreement between the two before they exit the before the Brexit, the EC. So in any case, that is kind of creating more of a positive mood in terms of the stock market here. So let's kind of jump ahead here to the bond market. Bond market's up about 3 basis points from where we left off yesterday. As you can see, we started the morning off a little bit lower, but we've been kind of rising a little bit. We had a late day jump a little bit. We were kind of hanging around 8, 9 basis points, and it jumped up to 14 basis points. So I'm going to go ahead and say we're getting that pricing for better today. As we mentioned yesterday, it was about the same as where we left off on Friday, and but it kind of continued to get a little better late in the day. Like the last half hour, it kind of spiked upwards, and then today we're kind of getting that. So I'm going to go ahead and say today is a little bit better pricing than what we saw yesterday, for the most part here. So let's take a look here at the yields. Yields are testing its new ceiling of resistance. It broke below yesterday. It's hanging right about 1.47 right now. And again, it's kind of pushing, it's trying to fight a break above, back above that. So we'll see if it holds or not. But as of right now, it's below that Fibonacci level, which was a floor of support. Now it becomes a ceiling of resistance. And it could, it's possible it could hold. So we'll kind of wait and see. All right, so that's pretty much a wrap. Again, mortgage rates should be a little bit better today because yesterday we didn't get that late surge. I don't think a lot of lenders priced that into their pricing yesterday. So, in any case, I hope you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.